Good morning, sir. Now we will present our tutorial 7. Good
Hello, my name is Sinjala. Today I want to present the tutorial 7 session A. 1. Which of the following statement is true? D. An implicate cost is a cost that represents the value of resources used in production for which no actual monetary payment is made. 2. Economic profit is the difference between the total revenue and donkey, the sum of explicit and implicit costs. Consider the following information about a business Jerry opened last year. Price equal to RM5, quantity sold equal to 15,233, implicit cost equal to RM 18,000, explicit cost equal to RM 33,000. What was daily account profit? Accounting profit equal to total revenue minus total explicit cost. AP equal to RM5 multiply 15,233 minus by RM 33,000. AP equal to RM 76,165 minus RM 33,000. AP equal to RM 43,165. So the answer is A. Because B. Do not vary with output. 5. The change in total cost that results from a change in output is donkey mechanized cost. This is because MC equals to ATC divided by AQ. 6. The main difference between the short run and the long run is that donkey in the short run one or more inputs are fed. This is because short run is a period in which some inputs are fed and some inputs are available. 7. The mechanized physical product MMP of a variable input is boy, the change in total output that results from changing the variable input by 1 unit. 8. Which of the following is not an explicit cost? Donkey, the factor owner type. This is because the factor owner type is implicit cost. Section B. 1A. The table below shows the cost of production from film wire in the year 2015. 1. Based on the table above, calculate the marginal cost MC, avalanche total cost ATC, and avalanche variable cost AVC for each level of output. The marginal cost calculation is MC equal to TC equated by Q. So this one must be calculated from the down to out. 730 minus 710 divided by 8 minus 7 equal to 140. This is all the calculate of this part. Avalanche total cost ATC, the calculate is ATC equal to TC equal to divided by Q. For example, 750 divided by A equal to 93.75, and when less variable cost formula is AVC equal to TVC divided by Q. Example, 700 divided by 8 equal to 87.5. This is all the calculate of this part. To compute the fixed cost from frame Y, total variable cost plus total fixed cost equal to total cost. The number is taken from the previous slide. 150 divide 150 equal to TFC plus 100. TFC equal to 150 and 100 minus 100. TFC equal to 50. Thanks.
Good morning, sir, and my fellow friends. My name is Zhi Clement. Now I want to present essay question 2 until question 4. 2A. Define the law of diminishing marginal return. The law of diminishing marginal returns is also known as a law of diminishing marginal product. As ever larger amounts of a variable input, for example labor, are combined with fixed inputs, eventually the marginal physical product of the variable input will decline. B. Briefly explain the difference between the following terms: explicit cost and implicit cost. Explicit cost is a cost incurred when an actual monetary payment is made. Example, the explicit cost of a gallon of milk is 5 ringgit. Implicit cost. Implicit cost is a cost that represents the value of resource used in production for which no actual monetary payment is made. This is incurred as a result of a firm using its own resource that is owned. Example, I am the manager that earns RM7K per month. Then I want to start my own business, so I quit my job as a manager and give up the RM7K. Short run and long run. The short run is represented in sufficient time. The short run is a period in which some inputs are fixed, some inputs are variable. The costs associated with inputs, fixed costs, and variable costs. Long run represents sufficient time. The long run is a period in which all inputs can be changed. The cost associated with inputs, variable costs. 3A. Sam quit his previous job as a corporate lawyer at which he earned 65,000 ringgit a year and opened up his own law practice. After 1 year, his business earned 200,000 ringgit in sales revenue and he incurred 85,000 ringgit explicit costs. Based on the above information, calculate his economic profit. The explicit cost is 85,000. The implicit cost is 65,000. The total revenue is 200,000. The formula of economic profit is total revenue minus explicit cost and minus implicit cost. So the answer is 200,000 minus 85,000 minus 65,000 equal to 50,000. B. Smith Tire Company has total fixed cost of 300,000 ringgit per year. The firm's average variable cost is 80 for 10,000 tires. Calculate the firm's average total cost when firms produce 10,000 tires. The total fixed cost is 300,000. Average variable cost is 80 ringgit. The quantity is 10,000. The average fixed cost is total variable cost divided by quantity. The formula of average total cost is average fixed cost plus average variable cost equals to TVC divided by Q plus AVC equals to 300,000 divided by 10,000 plus 80 equals to 80 plus 30 equals to 110 ringgit. 4. Using appropriate diagrams, explain what will happen to a firm's marginal physical product and marginal cost when it continues to increase output in the short run. This is a diagram of MPP and MC. The left hand side is MPP and the right hand side is MC. When workers are productivity, the MPP will increase and the MC will decrease. The marginal physical product decrease, the marginal cost will also increase. If the MPP achieve maximum, MC will also achieve minimum.
Good morning, sir, and my fellow friends. My name is Tan Boon Ping. Today I'm going to present essay question number 5 to number 7. Question 5a. Define accounting profit and economic profit. 6 marks. First is accounting profit. Accounting profit is generated by business activity itself. It is difference between total revenue and total explicit costs. The formula to calculate accounting profit is total revenue minus total explicit cost. The second is economic profit. Economic profit is the difference between total revenue and total cost, including both explicit cost and implicit cost. Economic profit is usually lower than accounting profit because it includes implicit costs. The formula to calculate economic profit is total revenue minus total explicit cost and total implicit cost, or accounting profit minus total implicit cost. 5b. Samantha has been working for a law firm and earning an annual salary of 80,000 ringgit. Using her own savings from the bank, she decided to quit her job and open her own law firm. Below is the yearly data of her business. Calculate the following values: implicit and explicit costs, 6 marks; accounting and economic profits, 4 marks. Before we start to do this question, we need to analyze which is the total revenue, explicit cost and implicit cost. Explicit cost incurred when an actual payment is made. Implicit costs that represent the value of resource using in production for which no actual payment is made. The total revenue in this question is 155,000 ringgit. The equipment rental 1,000 ringgit is explicit cost. Interest earned from savings in bank 500 ringgit is implicit cost. Because she used her own savings from the bank and opened her own law firm. Next, the office rental 15,000 ringgit is explicit cost. Utilities 1,200 ringgit is explicit cost. Salary for bookkeepers 35,000 ringgit is explicit cost. And the last one is annual salary 88,000 ringgit. It is implicit cost. After we do the analysis, now we can start to do the calculation. Implicit cost equals to 80,000 plus 500 equals to 80,500 ringgits. Explicit cost 1,000 plus 15,000 plus 102,200 plus 35,000 equals to 52,200 ringgits. Accounting profit, total revenue minus total explicit cost, 188,000 minus 82,200 equals to 102,800 ringgits. Economic profit, total revenue minus total explicit cost and total implicit cost equals to 155,000 minus blanket 82,200 plus 80,500 equals to 32,300 ringgits. Next, question 6. The table below shows the total cost of production of a firm at different levels of output. Based on the information given above, compute the following costs. Marginal cost of the third unit of output, 3 marks. Average variable cost when 4 units of output are produced. Total fixed cost for every level of output, 3 marks. Number 1. Marginal cost of the third unit of output. The formula of the marginal cost is change in total cost divided by change in output. Based on the information given, the total cost of the second unit of output is 200 ringgit, and the total cost of third unit of output is 240 ringgit. So the marginal cost of the third unit of output is 240 minus 200 divided by 3 minus 2. So the answer is 40 ringgit. Number 2. Average variable cost when 4 units of output are produced. Average variable cost equals to total variable cost divided by quantity of output. As we know, the question didn't provide the total variable cost. So we've used another formula to get the total variable cost. Total cost equals to total fixed cost plus total variable cost. So total variable cost equals to total cost divided by total fixed cost. When 4 units of outputs are produced, total variable cost is 230 ringgits minus 100 ringgits equals to 230 ringgit, 20 ringgit. So the average variable cost when 4 units of output are produced is RM 55. Number 3. Total fixed cost for every level of output. Total cost is equals to total fixed cost plus total variable cost. When level of output equals to 0, there is no variable input has been used in the production, so the variable cost will not exist. Therefore, the total cost will be equals to total fixed cost. When output equals to 0, total cost equals to total fixed cost. The total cost of the question is 100 ringgit, so the total fixed cost is 100 ringgit. Question 7. The following table shows total cost for journey for risk. Based on the information above, answer the following questions. Fill the missing values. 9 marks. What is the total fixed cost? TFC 2 marks. Fill the missing values. The first is total variable cost. Total variable cost equals to total cost minus total fixed cost. At output equals to 0, total cost is 40 ringgits, so the total fixed cost will be 40 ringgits as there is no variable cost exists. Total variable cost for each output is 20, 50, 90, 140, and 200. The next is average fixed cost. Average fixed cost is equals to total fixed cost divided by output. And then the answer is 4, 2, 1.33, 1, and 0.8. Total variable cost divided by output. Since there is no total variable cost for output equals to 0, so the average variable cost for output equals to 0 is not exist. Then the average variable cost for output 10 to 50 is 2, 2.5, 3, 3.5, and 4.